Hey, so today, this first one, what I want to talk to you here about is what investing really is. And so we'll go through a couple of things. I'm going to add this slide deck up here. And so we're going to talk about a few different concepts here, basic concepts about investing in the stock market, investing in general, and income producing assets, um, ownership, wealth, time, and cash flow, right? So, what a lot of people think investing is picking stocks, timing the market, buying low and trying to know when to sell high, watching prices every day, and those kind of things. And you know what what uh, what most people approach it as a game, right? Over here, and and that's basically why they struggle. So what it really is allocating capital today to generate future cash flows. That is really that is really the key. That's what we're trying to do here. This is basically the definition that professionals use, and that's what we want to be as professional investors. Basically, act like them. And so, what investing equals ownership. That's the key. You actually own part of a company, which is incredible that we're allowed to do that, right? I mean, that's just you think that would be saved for just a special elite or something, but we can all own these different companies that are publicly traded. A stock is just not a ticker symbol. It's ownership in a business, and we have to analyze that business and whether we think that business is a good business or a poor business, and whether we like that company, if we like the management, we like the markets they're in, we like the products or services that they sell. And then because we're going to share in the profits and losses of that company. Um, and so basically, you invest in Tesla, and Elon Musk is essentially working for you, right? You invest in Amazon, and Jeff Bezos is essentially working for you. As a shareholders, that's they work for the shareholders. Now they're big shareholders themselves, so your interests are aligned also, which is really key. So you know, uh, here we're going to talk about the difference between speculating and investing, like day trading. That's basically speculation. Any assets that aren't income producing assets, like gold or crypto, things like that's speculation because you can't analyze them by what their cash flows are now, and what you think their cash flows are going to be in the future, and then bring that back to a present value. That's basically what we do as real stock investors. And the question is basically, do you want to own this business, right? So let's talk about how wealth is actually built, right? We have our income, and then we have to save some of it, and then some of that we save we invest, and then over time, by investing, the interest that we're getting, the return that we're getting compounds, and that compounding is the magic sauce right there, right? And that is what creates wealth. Wealth is a system, it's not an event. And so that's what I want to try to really get across. And so we have to think of ourselves as capital allocation systems, right? And just think about this, we are basically businesses. We operate as businesses intuitively in our life. I mean, we get our income from our salaries or whatever it is. We have our expenses, our rent, our mortgage, our car payments, clothes, food, all those kind of things, right? Gasoline, electricity bills, all those the bills come in, right? Those are our expenses. Same with a business. They call it revenue or sales, right? They have their costs, they have their expenses, and then they have their profit. And we would call our profit what we have left over to save. And then what a company does is either distribute some of that profit back to the shareholders as a dividend, or they reinvest it in the company, and that's called retained earnings. They retain some of the earnings, some of the profit, and profit, earnings, and net income all mean the same thing. So don't get confused by those phrases, right? And basically, they invest in the company, and we can invest our money into different stocks that we like, right? So the real engine of wealth is compounding. And that's the returns on the returns we previously made, right? And so that you can see how this goes up exponentially. It's really when you get up here, that's when you start to really grow your wealth, right? Because the growth is exponential. You're compounding returns upon returns. And the key variable is time. We can't be impatient. We have to wait and let this system work, And so that's starting early matters more than being brilliant. Or, there's a Chinese proverb, the best time to plant a tree was 20 years ago, right? The second best time is now. So really starting as soon as we can, not deferring or delaying, saving some money and investing that money. That is really, really the key. So time is a greater thing than timing. You don't need to time the market, you need time in the market. So that's really key. Professionals stay focused on staying invested, not guessing short-term moves. The stock market's going to go up and down. You don't need to freak out about that. You just let it over time, the squiggly up and down, the noise, it'll keep going up and to the right. That's what we really wanted to do, right? So here, what we're doing, every investment basically is you're looking at future cash, right? So they're all the income producing assets, right? They're producing income, they're producing future cash. Stocks produce future profits. They're going to make money next year, the year after, is what we hope. Sometimes they have losses that we don't anticipate. We wouldn't invest in companies that we thought were going to lose money forever, unless they're losing money to gain tons and tons of market share like Amazon did, and then they start making money. That's another game, but that's strategic, right? Your bonds give you interest payments, right? You have a bond. A bond is a debt, and then there's interest payments, and people that understand interest, earn it, and people that don't understand interest pay it, with their credit cards or something, right? And real estate is a great investment too. Having rental properties, same thing. You're going to get rent, you're going to get future cash, and you can value a property based on what the present value of those future cash flow streams are. And we'll talk about that later, but that's really the key. That's what we want to do. And the question always is, what future cash will this investment produce? You know, this is the question that drives everything we're going to talk about and learn. So, we'll also be talking about how to read financial statements, obviously, so we can know how companies are making their money, how to build investment portfolios, how to value cash flows, discounted DCF is discounted cash flows, so we can value income producing investments, and then how professionals invest, and that's the way we're going to do it. And so I'm going to leave you with this, idea. Investing is not about predicting the market. It's about understanding value over time. We're not trying to predict the stock market. We're trying to understand the value over time. So that's the key. And catch you in the next video.